Okay, here we go. We are now ready for overhead, and this can be confusing, so just bear with it a bit. Looks like I have that a bit too big. How's that? Okay, so overhead is an interesting expense or an interesting cost that we're going to apply, because we're going to find a predetermined overhead rate. And that's going to estimate the overhead that's applied to jobs as it goes through. One of the reasons we estimate is because we don't have the actual costs when we're applying it to these jobs, especially the overhead rates, because we only pay those periodically. So we're going to estimate it instead. And we'll record the estimated, but we'll also record the actual. And at the end of the year, or maybe in the middle of the year, we'll adjust the overhead into cost of goods sold, just to make sure things are being applied correctly. And I know that's very confusing, so let's look at this. So to determine a predetermined overhead rate, you look at and you estimate what you think your overhead costs are going to be. Then you select something like labor, and you say, well, I think our direct labor is going to be X amount. So, and we always know what the labor is, usually, at that date. So, then we're going to say, okay, I need some way to compare those two. So, I get a ratio, or I get a rate. So, for every dollar of labor that is used or applied or accumulated, I'm going to say there's 160% times that dollar that's going to be an estimated overhead. So for every dollar of labor, it's going to be $1.60 in overhead that's going to be applied. So I just keep that in mind, and let me show you what it looks like here. So let's look at this. They have decided their overhead's $480,000 for the year. Their estimated labor is going to be $300,000, so they're going to apply overhead at a rate of 160% of labor. So to each of these jobs. So we know our direct labor costs that are put on here. So I have $1,000 on job 15. I'm going to multiply that times 1.6 to come up with my allocated overhead. And we'll total up all of our job sheets with that applied, and we'll have a journal entry, and that's going to go into work in process. So you can see as this part or this job accrues cost, it's going to be correct to a certain point with factory overhead. So it's accruing everything. We have a good picture of when I look at that job, I know how much has been spent to date on that particular job. So we've got one more. Let's go here. Here's one where they're actually using the machine hours. They've looked at it and they said, okay, we're going to have $240,000 in overhead. We're going to have 1,600 machine hours. And I'm going to keep track of machine hours for each job. So if I have 80 hours on job 1, if I apply that ratio or whatever that driver is, it comes to $150 per machine hour. I'm going to have how much overhead should be applied to job 1 and job 2. Once I figure that out, then I'm going to apply it and put it into my work in process. So, but notice the factory overhead, that's a credit. Okay? That seems somewhat awkward, but it's a credit because it's applied, it's not actual. So we've applied it and we have it into our work in process now. And it shows up on our balance sheet. Now how do I record the actual overhead? Well, here you go. You've got this in this fancy here. You have a T account. Now this is my applied right here. I've been applying overhead throughout the period. And I'm coming back now and I'm saying, oh, I took this out of raw materials. It's an indirect. I have to apply that to factory overhead. So I take it out here and I apply it. Now notice that's a debit. So that gets debited here. The trick is at the end of the period, you've applied this, but this is the actual. This account should equal 0. If it doesn't, then we have to do some adjusting. So let's go to the next slide. And this is just showing indirect wages, and they're being applied directly. These are the real indirect wages. They're being applied as a debit also. So, and then we're doing the other costs. So I'm actually doing the depreciation, I'm doing the rent, I'm doing the prepaid. This is a debit to my factory overhead. So, when I get all finished, now remember, I've been applying from my job sheets here, but this is the actual overhead. Now, not knowing what we have applied, I'm going to say, what happens if this shows up that we've applied $4,000 worth to the job sheets? Well, that would mean I've only had $3,900. So applying $4,000 to $3,900, I've overcharged $100, and I would have to make this account equal 0. So let's keep going. Now, here's one where we're at the end of the year. These are all the actual overheads that have been accrued. We've just finished up that's our total. And this is what's been applied off of the job sheets. As you look at this, we've actually had $305,000 worth of costs, but we've only associated with jobs $300,000. So that means I've underapplied. So I need to correct that. And to correct it, if it's immaterial, that's a very small amount out of $300,000, I'm just going to increase my cost of goods sold and decrease here that factory overhead to make it 0. So what that does is it increases my cost of goods sold, which is going to decrease my profit. So let's go look at another one. What do we got here? This is on the other side. This is where I've applied $300,000, but I only needed to apply $298,500. So I've over-applied. So now I need to decrease my cost of goods sold and balance out this account. So when you look at it, if your actual amount is higher than your applied amount, you've under-applied, and you need to increase your cost of goods sold. If the applied amount is greater than the actual amount, you have over-applied, so you need to remove some of those costs out of your income statement. This would be a good sheet to write down or copy out of the book. And this is just an entry showing you. So here's a summary of costs as we go through this. This is a good picture showing the T accounts and how it works. So you have raw materials. Here's a raw materials inventory. Here's your factory wages payable. So what we're looking at is raw materials. We're looking at overhead and our indirect cost, and we're looking at direct labor costs or labor costs. So, as you know, raw materials can either go into work in process as a direct or go into factory overhead as an indirect and then into work in process. Same thing with your direct, with your labor. It can go into as labor, indirect labor, or it can go in as a direct cost to that part. It all goes into work in process inventory. We'll work on these, adding costs, accruing costs, and adding overhead until they're complete. When they're complete, then we transfer them to finished goods. And then from finished goods, they get sold, and they become a cost of goods sold and go into delivered goods, obviously, but they'll go into the income statement. This is just a really very nice overview of how things flow through. And this is what you have to remember when you're doing job cards and where they go. Now here's a summary of cost with the balance sheet, which is a little more direct. Okay, you've got your raw materials that go into your work in process. The work in process gets transferred with the cost of goods manufactured now, and then the cost of goods sold. So these are balance sheet accounts. These become income statement accounts. That cost of goods manufactured becomes an income statement account also. Usually. We'll have to think about that. Cost of goods sold. Yeah. So, let's look at the next one. Whoa, I made that way too small. Can you see that? Here's the summary, okay, as you look at it in journal entries. And then here's that schedule of cost of goods manufactured, which gets transferred into the finished goods. That's the amount. So you're going to take the direct materials, the direct labor, the factory overhead applied, and then that gives you total manufactured costs. You're going to add in work in process, and then you're going to subtract what's left, and that gives you cost of goods manufactured. That's how much those goods are worth when they're transferred into the finished goods. And that covers job cost. Thank you, and I'll see you in class.